Hello, everyone. Welcome. Um, I am Carly Grunman, and I gotta find my comrades, Carolyn Briley. I see her. Let me pull her up and make her co-host. And let's get Christy going. How is everyone today? Where are you guys all joining from? Us from? Let me know in the chat. Let me pull this chat open. I'm seeing some familiar faces. How are you guys? Charity, Spencer, Brandy. Hello. Okay. Let's get Carolyn up here. Let's see if I can get her to. She keeps hopping around. All right. How is everyone today? Let me pull up the chat. Let's see where y'all are from. South Carolina, Arizona, Los Angeles, Virginia. We have people from all over the country today. So, for those of you that don't know me, I am Carly Grunman, and I am 1/3 of Opal Equity. And Opal Equity is a business that two of my dear friends, Christy Schnurl and Carolyn Briley, started. I'm trying to find these guys so you guys can see them too. Look at all these familiar faces. Where is everyone? Okay, while we look for them, where are you guys from? What are you guys hoping to learn from this? I would love to know, what are your guys' goals? Terrell's here. Charity, Greta's from Philadelphia. Pablo says, "Are you from Linwood, Washington?" I'm in Gig Harbor, Washington. We got it. Idaho people here. Michael, your goal is to build capital and buy multifamily. Michael, you are in the right place. It turns out that this is going to be a good Zoom for you. Okay, let's see if we can find Carolyn. And
what's up?
There she is. I couldn't find your face.
I'm here.
Hi. You guys introduce
Happy
yourself.
Friday.
Let me get Christy pulled up here. Add spotlight. Gang's all here. We unmute you, Christy.
Oh my gosh.
We made
Look
it.
at us. Happy
Well,
Friday, guys. Everyone
happy
pumped?
Friday. Yes. Happy Friday. I'm going to make you guys co-host so you guys can have all of the rules. I was just asking them what their goals were. Tammy says to build capital and fund more deals. Affordable housing for single moms, Beth says. Shanna, hello. Brandy Farmer wants to be buying self-storage and wants to start. So you guys, all of these goals that you guys have, it's great. Spencer Hunter wants to partner with others on big real estate. You guys are in the right place. So we're going to go over today how you can do. So we're going to talk about, for our example, is a multifamily deal. But I want you guys to know you can do this for other assets, affordable housing, right? Storage units. What else? You can pretty much do it for most commercial deals. Is there anything that people can't use this for? No. Yeah.
I don't think so. It's just the technicalities, which we'll get into. But as far as assets go, it's a structure. It's a structure that can work for most asset types, I think. So
Yeah. Shanna's like, can you do it for a real estate fleet? You could. It is a
That'd be
commercial.
so cool.
You really could do it for renting out RVs. So what we're gonna go over today, I don't know why my thumb is thumbed up, but do you guys want to introduce yourselves? I kind of already introduced myself for everyone that doesn't know everyone, and then maybe we can get started and show everyone.
Yes, would love to. Hi, everyone. I see some familiar faces and really excited to see a lot of new people in here. If you can turn your camera on, I'm sorry, but if you can, I want to see all of your faces. We want to see all of your faces. So please chime in. Hi, I see everyone waving. Hi. Thank you all so much for being here. I'm Carolyn Briley. I am one of the fund managers at Opal Equity. I started my real estate journey almost 4 years ago, coming up in May, and I can't believe how fast time has flown by. I've been able to access all of my portfolio through creative finance. Like every single asset in my portfolio is through creative finance, which is so amazing. And it just really speaks to the power of like how we can utilize this and use it at scale, which we're going to go over today because we did do this deal with creative finance too. but I have a portfolio and I'm partnered on over 600 doors. I entered into the multifamily space a little over 2 years ago because I was like, okay, I know how to leverage my network. I have a strong network, but I myself want to get into bigger deals that I don't necessarily want to take on the burden of operating. And this was the method to do it, what we're going to go over today. So I'm really happy and proud to be a part of over 600 doors, over 300, maybe 400 million in asset value, which is really amazing. I'm in Dallas. I do this alongside my husband. I'm sure a lot of you know him through the Sub2 community. He's the software guy. He's my integrator man. He does all of that stuff. And I just love talking to you people and getting into relationships with everyone and doing fun things. So super cool to be here. I'm the visionary. And yeah, you can find me in Dallas. Christy.
Hello, everyone. Well, I'm Christy Schnurl, and I'm the president of Opal Equity, and I'm so honored to be partnered with these amazing women, and to have them, as my partners, as my friends, and yeah, we're excited to get into it, talk about what we've been doing. A little bit about me. I see a lot of new faces in here because I'm a little less involved in the Sub2 and Gators. But I love that you guys have all joined today. So I've been in the multifamily space for over 15 years now. I started in acquisitions for a private syndication firm. It's a lot of big words. We can go over later, like what those mean for those of you that are interested in multifamily. But basically, it means that the company I worked with, we pooled together money into funds and purchased a bunch of affordable housing projects, multifamily apartment projects. And we did that to work with institutional level investors so that they could get the tax credit benefits. So we came in as limited partners and structured it that way. So I did that for 5 years. I worked in acquisitions. That's where I learned underwriting, due diligence, funds, investor relations at a different level. Because when you're working with banks and insurance companies, it's very different, I can tell you, than working, with retail, which is the everyday investors like I am, individuals. But I did that for 5 years. Over the last 10 years, I have been working with my family business. We are consultants and we work with multifamily developers. So we're helping people to build apartment communities and commercial properties for lower construction costs and to design it better to just be more cost effective overall. I'm also one of the leaders over in the multi-mastermind community. So I spend a lot of my time over there helping people as they're getting familiar with multifamily, teaching them the concepts and sharing my knowledge and giving back in that way. I'm also a bit of a visionary, but have a unique where I've, as a small business owner working in my family business, have really had to hone some of these integrator skills. And so, with the three of us here, I do a bit on the back end and really help with some of the integration with our team, as well as with Carly. And yeah, that's just kind of a high level overview of a little bit of my background.
Oh, yeah.
I was
Carly.
muted. I said Christy's our president. With the she's the president of Opal Equity. She knows her stuff. She's been in it for a little bit. And so we got together and we decided we all had this goal of getting into multifamily. Christy's been in it for 15 years. I've been in real estate, the traditional real estate for like the last 15 years. Carolyn's got, how many doors do you have, Carolyn? You have a lot of doors.
I'm
in 4 years,
like over 600 doors.
Over $600 doors in 4 years, and that's
and over $600 too. Yeah,
did I say dollars?
You're about to.
I hope so.
Just a little bit.
Just a little bit. So Carolyn started what she said like 4 years ago, and so we wanted to. Lots of people have been asking us because we got into this. We got into this creative finance deal, 2.5% rate in Dallas, Texas, which if you guys don't know the multifamily market, that's I think the hottest market or one of the hottest markets.
For sure.
160 unit, borders on a golf country, invite only country club, like B+ asset. And we did not do it on our own. And I think there's a lot of misconception that you have to be like, okay, well, I have to have all the money to have all the knowledge. I have to have all the underwriting skills. I have to know all the people. And it's not that. So yeah. Do you guys want to take it from there?
For sure. We'd love to do like a little mini breakdown for you. I think Christy has an awesome slideshow just for some reference, just for some engaging material here. But we're going to go through some of the slideshow. We're going to go through some of the presentation. But really what we want to do here is pull back the curtain of why we chose to do this, why it's a game changer for everyone here. Everyone here has their own like mission, their own purpose. I see some of you have dropped that in the chat already, and there's so many different avenues that we can take this vehicle down, right? So it's not just for multifamily. If you're thinking in the long run that you want to get into RV parks or self-storage, or maybe you're already in that space, this is just like the next piece of the cake to get you to diversify and scale not only your portfolio, but also your network, right? So we're going to pull that up and just go over that. We're going to pull back the curtain. We want to answer questions. And while we're chatting, while we're walking through this, please feel free to drop your questions in the chat as they come up. We're all probably also going to call on some of you randomly just to see like, you know, where you're at in your journey, what you want to do with this. Is this speaking to you? That is this meant for you? Right? Because there's a lot of back and forth, including myself. Like when I first got started in this is my second fund to fund too. So there's a lot of things that I even relearned in this second time around. And like, there's a lot of new things that we just encounter. And I think the most important thing now for everyone here, it's February, it's 2025. The month is almost over. It's literally over next Friday, you guys.
Wow.
And then we're going creeping into quarter two. Right. So it's like time is of the essence. We have a huge opportunity. And now is the time to start taking action and start implementing those little things. So when the opportunity comes, you're ready to go.
Yeah. And so there's many ways you can do this. And the way that we did it, and in my humble opinion, I feel like it's a very safe way to do this if it's done the right way. We did this with something that's called a fund to fund. So Christy or Carolyn, do you guys want to like first give like a high level overview of like what is a fund? And then what is the difference between a fund and a fund of funds? I think I might have skipped ahead on the slides.
No worries. No worries. Christy, our amazing president, is going to give us that lowdown.
All right. So I'm not going to go into all this, but we did want to touch on this first because I know I cannot tell you how many times I have heard, or these ladies have heard, you guys probably have all heard, everyone right now is talking about a fund. Like, I want to start a fund. There's big opportunities coming, everything that's been going on in the market the last couple of years. And it just makes sense, right? You think if we can pull together the money now, we're ready for when the opportunity strikes. So we have a whole separate handout that we'll send to you guys after that digs into each of these. But the first thing we wanted to do is to kind of say, like, what is a fund? Because people use that term so loosely. And what we are going to talk about today is a very specific type of fund. So this is not something that can be applied to all the other terms. Most of the time when someone's talking about a fund in concept, what they're sort of describing is like what's also called an open-ended fund, or like blind or semi-blind fund, where they just want to raise a bunch of capital, bring together the money. They don't yet have the opportunity. They might have an idea. Maybe they're like, you know what? We want to do self-storage, or we want to do RV parks, or we want to do multifamily. And maybe they have some like kind of a buy box, right? But nothing super specific. So those would kind of fall into those categories. Now, that is a method that you can use and go pursue those. But what a lot of people don't realize, if they don't have the experience yet, is that those are actually the most advanced strategies. And the reason for that is because the legal work behind it is so complex. So to be able to really specify what those fund requirements are, how an investor is coming in, how they'll get paid, at what point it met, like all of these things, and to try to identify risk and disclose that properly in your legal structure and in your paperwork to your investors is so much harder if you're brand new into the space and if you don't already know exactly what you're buying. So that's why those are more of like advanced strategies. I'm not going to go through this whole crazy chart of things right here, but what I really just, where you can kind of see this at a high level is like, do you need a track record? Like you need a really strong track record for some of those types of funds. What we're going to discuss today is what's called a fund of funds. That's less well known, but has been gaining traction over the last few years. And it's a structure that people have really figured out how to do it in a way that works for investors, works for the main operators, works for the fund managers for the fund of funds, and that makes sense from like a fee structure, from a legal compliance. There's so much with like securities and all kinds of legal stuff that you guys need to be aware of, that this is really the easiest way in. And like Carly said, the safest way. So I'm just going to show you really quick this little diagram, or in a nutshell, basically, it's like, what is a fund of funds? It's really just a fund that is investing its money into a parent fund. So in our case, you can see these photos behind. These are all of the asset, the Dallas asset. So for us, really what we did is we became one big check writer that went into this other opportunity. We paired up with someone who's really experienced, has a long track record of doing this for over a decade, has done over $1 billion of transactions. We're riding their coattails. We're really like trusting in them and have vetted them as like the person who's leading the charge, owning, operating this asset, managing it, executing the business plan. They've done this before in this market, in similar markets with similar assets. Like this is rinse and repeat for them. So for us, bringing in our relationships, our investors, and saying, we have vetted this, this is a good opportunity we're excited about, that we want to be involved in, this is how we're going to get you in. And then we use the fund of funds. So that's really what it is. You can essentially look at it as like the three of us here as Opal Equity. We manage the funds. So we went through, and we can talk a little bit more about what that means, but like structuring it legally, all of the things. We worked very closely with the lead sponsor, who was the one that actually had the opportunity. And we essentially created a bundle of investors to write one check that then goes to that parent opportunity. And so that's what a fund of funds is. And that's why it's called a fund of funds, because you can imagine you have like the mommy fund or the daddy fund, and here are the babies underneath, right? Like they're plugging in just like any other investor would. It's just like it's one instead of a whole bunch, from the perspective of the parent fund.
And for Gators, and said too, if you guys are in any of those communities, it's like a really great connector. Like that's kind of oversimplified, but you were a connector. And so a lot of people get overwhelmed. They're like, I don't even know where to begin. Really, you can break it down to simply is you guys should be networking in this chat. You guys should be networking in Zooms. You guys should be networking on Facebook, going to events like Squad Up and all those events, and networking with people, because that is networking is going to be the foundation of your success, because you are basically networking with everyone to bring money. Good. Lots of ones. Who's here going to Squad Up? Spencer says. Who can we network with? Good. So I just wanted to drop that in there. It's a glorified connector, and it's where you can network your way, bringing relationships into multifamily deals, like wedging yourself, being like, I know a guy and a lot of guys and gals with money. Can I bring them to the deal? And I can get cut in on this deal. So yeah, I just want to chime in with that.
Love it.
Oh, go ahead.
No, I was just saying, I love seeing all the interaction. I love that this is making sense. Please, like, if anything at any point you're not getting, like, raise your hand. We're going to have number 2 designated as I don't know what that means. So if you throw a 2 in the chat, if you don't know what that means. Like,
no stupid questions.
Stupid questions at all.
No, there's no such thing as a stupid question. And so we leverage this. So Carolyn, in the beginning, Christy's like, I have 15 years of multifamily experience. She's a leader within Vina Jetty's multi-fi community. Carolyn, this is not her first rodeo. She has 600 doors in 4 years. And so she's a leader within the sub 2 community. I am in the other communities as well. And we're taking those relationships that we built and Vina Jetty was our lead sponsor. And we knew that she had stuff like it's not her first rodeo at all. She's had over $1 billion in transactions. And I think it's important when you're looking at lead sponsors to raise money for, we'll talk about this later, is to really vet them. And you just don't go off the internet and be like, who can I raise money for? Because you're really putting your money, your friend's money and your money in with this person. So that's why we chose fund to funds, because we have those relationships. And that is the value that we can bring to lead sponsors is we know people and we know people with money that want to be involved. So
Yeah. And I'm seeing a couple of questions pop up in the chat. Before we kind of move on, we can quickly address some of those. But there's a question here from Colleen that says, are you doing group up development, or is this a fund to acquire existing assets? So this is specifically for an existing asset is what we did. So basically we raised money to go because the lead sponsor, they already knew that this was the opportunity. It's a very short timeline when these multifamily deals, they go under contract and they have to close, right? So for this specific one, it was an existing asset. However, I will say there are opportunities in development. And it just depends on who's running the development, how they're structuring all of their equity and their capital. So that's how they're basically, what are the ways that they're using to get this deal done, right? To get it built. So there are opportunities that you could do a fund of funds if you find the right relationship and it's the right opportunity. So yeah, you absolutely, this isn't only works for multifamily existing or anything. These are strategies for larger acquisitions of assets. Michael Herrera is asking if he needs an LLC to legally operate a fund of funds. Absolutely. You actually need multiple LLCs. We're not going to dive into too much of that detail today because I don't want to lose all of you guys here. We're going to keep it high level and still try to address your questions. But yes, there's a huge legal component. Not only do you need an LLC, not only do you need an attorney, you actually need a very special kind of attorney, and they're called a securities attorney. And that makes sure that you stay compliant with the SEC, which is the Securities Exchange Committee, I think is what it stands for, but a securities attorney specifically who knows how to do the type of whatever asset class that you are working with and you're doing a fund of funds for, that is who you want to be working with to be able to structure that properly, to keep yourself, to keep yourself completely covered and out of risk as much as possible, right? And then also for your investors, it's a two-way street. We want to make sure our investors are protected. They're trusting us coming into these arrangements to invest their hard-earned money into something. So we need to make sure we're the best stewards and that we're fiscally responsible for that.
For sure. And then Spencer, you had a question here for me. Did you do a fund of fund with the Sub2 fund? I did not. I have done both of my fund of funds alongside Vina Jetty's opportunities. I think Sub2 fund might be coming up with the opportunity to do a fund of fund. I'm not for sure. Don't hold me to those words. But I think that is definitely on the horizon. And that's something that Pace is working on and looking at doing. So yeah, I would probably peek in with the Sub2 fund managers over there and see if that's an option.
Yeah.
The cool thing for me, so I did my fund of fund, both of them with Vina Jetty. So of course, definitely I looked at her track record. I've already established a relationship with her. We've been great friends for over 2 years now. And so I know what she's about. I know her track record. I understand what she's doing and going after these beautiful class B+, B assets and, doing value add to them and all these things. So I'm happy and honored to be a part of the 432 unit that set her over the $1 billion transaction mark. And by the way, that 432 unit, I'm super, super happy to be a part of. That was the largest women-owned asset to date.
Wow.
That was bought. So really cool fun fact. But yes,
I didn't know
430.
that.
Yeah. Super cool, right? Super amazing. And that's really, really impactful. That's such a trickle down effect. Of course, Vina has over $1 billion. She's operating it. She knows this back and forth, left and right, right? And for me, I'm getting to learn. Christy, Carly, myself, we're getting to learn and learn the ropes and not having to take on the innate burden and overwhelm of, okay, Drop a one in the chat right now if you think you can operate and manage a 432 unit. I'm gonna see crickets. Drop a cricket. Drop a cricket if you think you can't, right? So this is why this is exactly with help. Okay, exactly. So same mentality, Spencer. That's where I came in, because I'm like, okay, how do I leverage my network, my relationship building skills, everyone who's wanting to get a piece of that larger pie in multifamily and crossing over there? How do I do that? Because I've already been a GP. I've been a GP on a 30 unit and a 40 unit, and that is hard work. It's a different type of hard work what we're doing here, but a GP, has anybody a general partner here on a multifamily? I'm asking some questions, but feel free to drop it if you feel comfortable sharing that if you're a GP, but you understand the time and effort and energy it takes to source the deal, underwrite the deal, finance the deal, raise it, like all of these different things. And then think of it at a 432 unit level.
Yeah.
Like, okay, yes, you're expending the same amount of energy and time, but you're raising a heck of a lot more capital. It is hard work. Andrea, oh, it's so good to see you in here, Andrea. Good to see you. It's so much harder to do that. And so when this started coming up mainstream of doing a fund to fund, I'm like, this sounds like the perfect bridge to the gap I've been seeing for myself and for my network, for our networks that want to get into these bigger deals, right? So it's a game changer. I will die on that hill. I think it is an incredible vehicle for everyone. It's a win-win-win across the board for me.
Seriously. It really is. Should we go over the fund structure and like a high level view on like, I think it's a little bit up on the thing. The raising capital the right way, or what it looks like to structure your fund, like what that looks like for you guys.
Or the org chart
for us. I'll go down a little bit. Sorry.
This one?
We kind of went over that. That's like what a fund to fund is. Go to the one that has like the don't we have one that has like a structure of what the fund to fund looks like?
I think the only one we have with that is the
okay.
So this is the right down here is kind of the fund of funds.
Yep. So it's
all the money.
That's where you're bringing money up the chain of command. And so, so we do, I don't know, should we go how we did it, how we found the sponsor and then going through the legal and everything that we did?
Yeah.
And I'll share a little bit about, about my story too and my journey. So, I mentioned earlier, like I've been in the space for a few years now. And I will say, even with that, like in 2023, I underwrote probably 75 deals because I thought, okay, now is the time. Although I've been in the multifamily space for over 15 years, I have not owned and operated an asset myself. Like that's one piece that I haven't done. And I was like, this is something that I would like to do. So naturally, after spending 5 years in acquisitions, I went to that piece first. So I said, you know what, I know how to underwrite deals. It makes sense for me to be involved in acquisitions. So I'm going to team up with some people I'm going to underwrite. So I did. Now, granted, the market in 2023 for multifamily was awful because there just was nothing. None of the numbers made sense. Like the discrepancies, it was like any numbers that were even made remote sense were like 30%, 40% below what, they were hoping to get, what the list prices were, the whisper in multifamily fancy speak was. But I've realized in doing all of that how much I didn't have passion for that, even though it was something I had in my toolbox and that I was experienced in doing. So after that, I really took a back seat to reflect and to figure out where are my strengths or what fuels me, right? Because I don't want to get into something just because I can do it, I know how to do it. Mm-hmm. I want to do it because I'm passionate about it and I'm excited about it. And that's really where, after some time and taking a step back and really just instead pouring myself into a community for multifamily, it was like, the people. For me, it was really about the people, the relationships, the like helping people and, knowledge, helping people to learn the pieces that I already knew or to point them in the direction of the resources that they might need on their journey. And so in all of that, I realized that for me, raising capital was something, although I worked at, a syndication firm, I never actually raised the capital there. We worked with the investor or institutional level investors. So that means, banks, insurance companies, but we weren't out there like raising it from them per se. Like it was, their relationships that already exist. This was a product that they already knew they wanted to buy. It was more of like checking the boxes for them, where we're looking at each asset and making sure that as it's coming into the fund, it meets all the requirements for our investors, that they feel comfortable with that investment being in the fund with all the other ones, right? So it's different from what we're talking about with the fund of funds here. But the reason I raise it is because I realized in that it was really a lot of the relationships. And that's where the fund of funds came in, because I realized, one of the key things that I think that a lot of people, unless you've started to pursue multifamily or you've moved into the space, that you don't realize is that it is a country club in the multifamily space. They have the doors locked closed. No one wants you in. There is big money in multifamily. And let me tell you, most of the people, they don't want newcomers. They don't want you coming in. They don't want you coming and taking their deals, taking their assets. It is so hard to even get a broker, a commercial broker who's selling it, to take you seriously enough to give you information when it's being marketed. Like, here's the information about this asset so you could potentially buy it. Like, just to get them to give you the time of day to send you an email can be challenging at first. And the reason I bring all of this up is because there's this conception that like, oh, I can just start pursuing multifamily. And there's ways that you could do it and that you still could get a foot in the door, but 95% of this is locked down and they've made it exclusive to people who have experience. So they want to see that you have a track record. It's almost impossible to get loans if you don't have a track record. It's impossible. Like, there's so many things in place at every level, right? Like with the brokers, then with the lenders, like with the sponsors, with your investors coming in. Like, everyone wants to see that you've done it before. So how do you show that you've done it before if you can't get in the first place? And that's really like for us, and like for me over the last couple of years, what I've realized is like the fund of funds model is a beautiful vehicle to be able to do this, because yes, we're not technically getting into the deal at like the operator level, but what we are doing is really getting sort of an inside look at a piece of it, a bite-sized piece of like, this is what it means to own and operate it. This is what it means to do the legal work and a portion of what they're having to do at the parent level to get into this. Here's what it means to talk to our investors about these opportunities, to vet them for them, and then to help them get into it, right? Like, you're getting all of the baby steps that you would definitely are going to have to do and execute at a much higher level once you actually get in. And furthermore, you're building these relationships. So now as you're doing this, the beautiful thing is like a lot of sponsors with a lot of experience, they don't want to work with someone who hasn't been in the game. Like, they don't need to, right? Like, they're already partnering up with higher level people. However, if you're going to come and bring money to them, not to say they will do this with everybody, but if you can build the right relationships and it's the right sponsor, someone who has decades of experience is willing to work with you, most likely, if you're doing a fund of funds. Mm-hmm. So it's a way to partner with them. It's not a direct, it's not exactly the same, but it's that foot in the door. You're then building a relationship. They see what you're capable of. They see how you show up. They see your values. You're networking with other people. Now you have a much better opportunity that as these deals come along and someone has seen your skills, you've had a chance to prove yourself a little bit, that you get in at the next level, right? Like, it's not just the fund of funds. So that's really why, we want to share this, is because it really is this beautiful stepping stone. And this is coming from someone, like I said, I've for 15 years and I'm not in the country club. And I'm building relationships where hopefully I will be soon, but it is very hard to get there. And this is like an incredible model. And this is the shortcut and the cheat code.
Yes. And you're absolutely right. It's getting your foot in the door. It's getting your foot in that country club door, just to be like, let me bring enough value to where everyone's going to take me seriously. And what we learned is we got together, we can talk about that later. And we're like, okay, we've identified our lead sponsor. We've identified our group, who we want to work with. But then that's like really only half the battle. And then there's that other side, which we learned so much. You have to, like Christy said, you have to have a special kind of attorney to work with this. You have to be set up correctly. The SEC, the Securities and Exchange Commission, really Vina said on the call, and I just made me laugh, and because she's absolutely right. She's like, I go and get, what does she say, a full cavity search by the SEC, so you don't have to, because it's a really big deal with the Security and Exchange Commission to be raising capital. It's not just like a little gator deal or anything like, hey, can I borrow 10 grand to do a flip or something? Like, it's a big deal because you have other people's retirements and livelihood in there. And Vina's gone through, but at least in our case, or whoever your lead sponsor will be, has gone through those hoops and done that cavity search and been like, okay, she's good to go. So you can just ride their coattails on there. And so we had, what a huge misconception is we identified the person that we wanted to raise money for. It took her a while, like we always knew we wanted to, but then you just don't look at a deal and be like, okay, I'll take it. There's a lot that goes into it, so a lot to get to there. But once that the sponsor, the team, and the asset is identified, that's only really half the battle. There's a whole bunch of stuff that we learned. We were kind of learning through it as we were going through it, that we can also talk about, one of which is legal and compliance. So you have to go to an attorney's community. Should we talk about let's go through what the 506B and 506C is? Because there's two kinds of funds that you can raise. I always get them confused. B is the this is where Christy's brain shines. It's the which one is it? I get them
for
confused.
buddies.
Okay. Yeah.
B for buddies. Okay.
Oh,
so this one is important to touch on. We're going to get slightly technical here. If we lose you guys, it's okay. Just know that this takes a while to kind of get down. So if this is the first time you're seeing this or you're hearing this, don't panic. Okay. But it's important to mention with this for a few reasons, because we want to give you to walk away today with getting some knowledge, but also some red flags, and to know, like, here's the do's and the don'ts when it comes to this, whether or not this is something that you decide to do, because it does affect you if you're seeing other people doing this, and it affects you if you're seeing people investing into these. So we do want to touch on this. So 506B and 506C, those are basically their exemptions from the SEC, two different types of exemptions to be able to sell securities. If you are pooling together, and this does go into the single family space, but I think it's less talked about over there, but like, there's all these legal jargon terms and laws. There's like a Howey test, I think is what it's called. And basically it's like, if you're pulling together money from investors, it's passive, and they're expecting profit, and they're not actually managing or doing something in the deal. It's very passive money that's in there. You're selling a security, most likely. And if you're selling a security, that means that there's this whole big, huge, like, compliance thing you have to do, all this legal work. It's all these extra things. And like, it's basically like, when you think about the stock market, those are securities, right? Like, there's huge documents that you get if you're purchasing these shares. They have to go through a whole long process to even get listed. Like, those are securities. Now, the SEC recognizes that doing these real estate transactions, it wouldn't work if they had to do the same thing as like going public with a company. So what they've done is they've created some of these exemptions that we can still raise capital, pool all this money together, and basically do these exemptions under the fact that we are selling a security, but here's how we can do it and be compliant. So the two main ones that you hear the most about, there's others, but these are 506B and 506C. And basically it comes down to, do you have people who are accredited investors? Let's just take a quick gauge. Drop a 1 in the chat if you know what an accredited investor means, and drop a 2 if you don't, just so I know like how much, to make sure that you guys, okay, good. So we have a lot of people in here. I'm seeing a lot of 1s. Amazing. Okay, no 2s, but I'll just give a really quick definition in case there's a few that don't want to share their 2. But basically, an accredited investor is someone who, you have a net worth of at least $1 million, excluding your primary home, or you have over 250,000 in income or 250. Now I'm going to blank, but anyhow, over the last 2 years and expected for the upcoming year, or if you filed jointly it's 300,000. So that would make a person an accredited investor. There's a few other ways too, but so basically what you can do is you can either do a 506B, allows people who are not accredited, but they need to be sophisticated and have what's really important, a pre-existing relationship with you before there's ever a deal. So the reason I'm touching on this now, and this was a long way to get to here, but is because with a fund of funds model, you can technically, you could do a 506B, but it makes no sense to structure it that way. And I'm going to explain why. The reason is because your fund of funds is basically plugging into the parent's fund. So whatever the lead sponsor, whatever their parameters are, yours need to match it because your investors have to be compliant with their requirements. So if let's say that you have someone and you've identified and they're like, cool, we're going to go out, we're using a 506B so we can bring in some unaccredited investors. And you want to do a fund of funds. So you're like, okay, I'm going to come in and, I'll also do a 506B because that's what you're doing. I can match that. Well, here's the problem. My investor, my longtime friend or family member who is not accredited, but knows me, they have plenty of money. They understand these investments. They're willing to invest into my fund of fund, right? Cool. Now I want to put my money in the parent fund, but guess what? Let's say for the example, it's the same lead sponsor, right? It's Vina Jetty. And I go to Vina and I'm like, okay, well, my longtime family member is investing. She's never met that person. She doesn't have a pre-existing substantial relationship with this person before this deal ever started. That is the key. That parent sponsor, that team, that GP team, someone on it needs to know every single investor that's not accredited and have a significant relationship with them before you ever raise capital, like for these specific deals. So that's why it doesn't make sense, right? Like, why would you pull together people if they did have the same relationship? Then like, why would you even need us as a fund of funds? Like they can just have everyone direct. So that's why when you're doing a fund of funds, you're probably doing it on a 506C, which means everyone is accredited. And the reason for that is because then everyone, it doesn't matter if there's a relationship, if they know who the lead sponsor is or not. You can go and you can market to anyone. And like I can go out and I can bring a complete stranger in. So I can meet someone at Starbucks tomorrow and they could be interested in this deal and I can bring them in. So that's the difference between a 506C and a 506B. And hopefully I didn't just like make that more muddy for you guys, but
I don't think you did. But if she did, Carolyn put I love a good acronym or whatever these are. 506C makes sense with a C. Sense.
Yes.
Look at the chat.
It makes sense. Obviously, you're raising more than sense. But for this, just play along here. 506C makes sense. Okay. That's an easy way to remember this.
Yes. And B is for buddies. C is for sense. Buddies. So,
this is a good question here, Michael Herrera. Yes. Do I need to be accredited to create and manage a fund of funds? No, you do not. So your status doesn't matter. What does matter is if you wanted to invest into your own fund as an accredited, like that's where it gets muddy because technically you could become accredited for your own one specific opportunity that you're managing. But if you're not accredited, you then would disqualify your fund at the parent level. So that's getting super technical and in the weeds. So I'm not going to go too deep there. But yeah, it doesn't matter if you're accredited or not. That's why, again, fund of funds is a great model for people who are getting started. They maybe don't have the net worth yet. This is a good, way to start building some more income and net worth.
Yeah. And so we've talked about like the checklist. We'll give you guys this checklist that we created at the end. It's so amazing for like,
it's amazing.
It's so good. We can,
pull it up and just show a quick preview.
Should we? I have it pulled up if you want to.
Oh, perfect. Yeah. Let's do a scroll through.
Yeah.
I don't have it pulled up, so you can take it. I'll stop my share for a second.
Okay. So, and what's really cool about it is, so we've gotten, let's go to the top. So, we'll give this to you guys. So you have your we've talked about this. We know who we are, pre-launch stuff. So we've talked about already, you've defined your investment strategy. You have to select an asset class. A lot of us know what we want to do. Like people were saying, affordable housing. Define your investment goals. Define your investment strategy. So we've talked about this. You've defined your target investor. We just kind of went over this. What's our unique value proposition? What do you have to bring to the table? And then we haven't talked about this yet, but this is all pre-launch stuff. You got to get your team going first because everybody's got to define your brand, your name, who you are. We are Opal Equity. And I don't even know how we came up with that name, but it was a good, I love it.
That
So
was
we had
day one.
it
We
was
did that in like an hour, and that was amazing.
and it was like we were going so fast on this. We were like, who are we called? We got to get our attorney on the phone. What colors are we going to do? We got to get a website going. So it's nice if you guys, if you're like, I don't have a lead sponsor yet targeted or anything like that, you can start thinking about one, you can start introducing yourself to people, networking, and two, start thinking, building your team on who you want to build, build a fund to fund with, and also your branding and social media. So you're not like, oh shoot, we have something, gotta go find someone to do this with, gotta pick our colors, gotta pick our name all at once. So it's something that you guys can kind of be marinating on too. Um, oh, we should talk about this. Develop an investor outreach strategy. This is really good. This is finding your beginning with the end in mind and defining your plan and where you want to go and how you're going to get there. And then what else do we have? Connect with, or we got the legal, and you got to build your team, legal and compliance. Connect with investors early. It's never, I don't know if you guys have heard Pace say this, but it got ingrained. You want to start capital raising before you have a deal, which means you do not want to be like, okay, I'm going to go find my lead sponsor first, and then I'm going to go see if they have a deal, and then I'm going to go start capital raising. You guys should be out there networking with each other in Zooms, on Facebook. What are your goals? What do you have? What do you need? I am going to start raising capital, and you just put it out there. So getting it out there.
Carly, I'm going to pause you right there really quick. Christy, you probably have the same.
Well, we were about to say the same thing.
And you tell me if I'm right or not. But this phase of what Carly is just scrolling through, the pre-launch, it's several. We labeled it out in 10 checklist steps for you, but it is, in my opinion, and I'm sure Christy and Carly's as well, the most intensive, the most energy taking part of the process, because you're having to figure all these little pieces out when you're actually starting to raise money. Like, I'm just going to go, Spencer, okay, you're ready to be a part of a fund to fund. Are you ready? Do you have your website up? Do you have your fund name ready? Have you created your LLCs? Are you talking to an SEC attorney? All of these different steps that really should be in place before you get presented with the opportunity to be a part, to actually go in on a fund to fund, do the fund to fund, launch the fund to fund, right? So that's why I said in the beginning of this, it's February. We are in the very beginning of the year. You have some runway right now to start planting these seeds in your brain. These are things that you're probably already thinking about, that you're probably already doing. You're just not strategically doing them right now. You already have your network. You already know how to network. I see you guys networking in the chat. You're dropping your Calendly links. You're going to the meetups. You're doing all these things. That's great. Now start thinking of like, what is the end of this tunnel look like for me? What am I doing this for? Yes, financial freedom and all the things that we all say, right? But like, what do you want to happen this year? What boundaries, barriers do you want to break for yourself this year? And this is how it starts.
Yeah.
All these little steps that we're laying out in this roadmap for you, and we're going to deliver it to you at the end of this Zoom for everyone that's been here. So that was my piece. The pre-launch is the most vital piece of this puzzle for me, for all of us.
I think it is in real estate. I think when you're in anything, the most beginning that is the most intensive and the most important part of it to make sure everything's done right. So,
yeah. Do you know what else we could call the pre-launch? You guys, this is your personal brand.
Mm-hmm.
And this is the brand that's associated with the team that you've put together for this fund of funds.
Yeah.
And one of the things we titled, we called this Zoom today, pulling back the curtain. And one of the things that we promised you guys is that we were going to share, we're going to get a little bit vulnerable here, okay? And share the mistakes that we've made
Mm-hmm.
and like what we would wish we would have done. And for me, this is the one piece that stands out really strongly. And here's why. Okay. Like I knew I wanted to do a fund of funds for probably a year before I actually took action on it. And this is coming from and this will come as no surprise for anyone who actually knows me, but I'm like the slowest, most analytical thinker. Like I crawl along, you guys, and I stew. Okay. And that's just what I do. And I just push on the brakes so no surprise that it took me like a year to take action on this thing. But from day one, what I knew I needed to be doing, as soon as I knew that I wanted to be raising capital or that I wanted to be involved, honestly, just even when I was starting to underwrite deals, I should have been doing this more. But like I should have been focused on my personal brand more. I should have been talking about what I am doing. It doesn't matter, right? Any action I'm taking, sharing it publicly. And that was a big journey for me to even get to where I'm at today. Had I done that more and had we as a team, because that was the other piece we did not do. So one, I was not amazing at doing that. People who knew me close knew I was kind of up to this stuff, but no one outside of that. And if I had educated sooner and been super intentional and primed my audience, right? Primed my investors, the people who I went to business school with, the people who I grew up with, who I went to high school with, who I went to college with, who I've worked with over the years, those investors would have jumped in far sooner. And there are so many more that I know that are silently watching that I know for a fact, like I'm confident they will be my investors down the road. They just haven't seen it long enough. So even though I feel like I've gotten on here and I've started to build a personal brand over the last few years, I've barely scratched the surface because they barely even know that I'm doing this. And they need to know you're committed. If they're going to come with $50,000, $100,000, $200,000 checks to you, they need to know that you're taking this seriously and that like you are in this, your stuff, you're connected with the right people, that you're going to take care of them. And that all comes down to like your personal brand, how you're communicating that, how you're nurturing all of those relationships before that opportunity lands in your lap. And for us, even though I knew, so this is definitely my mistake, was I knew I wanted to do a fund of funds. I didn't know who I wanted to partner with though. I also spent a year just getting to know a lot of people and trying to think of like, who would I work the best with? What are the missing pieces? I have my strengths. Where are my weaknesses? What do I think would be necessary components to build a really strong team? Not only just to like for this 30 to 60 day window of when you're like raising the capital, but that I'm going to go through a journey with for this entire hold period. So like you are marrying these people essentially for this particular deal, the hold period's anywhere from 3.5 to 7 years. It could be longer, could be shorter, but so call it 5 to 10 years, right? Like whatever opportunities that you're looking at, like these people are going to be the people that you make decisions with, that if ish hits the fan, like that do you align in those values? And I know that that's a whole separate talk, but anyhow, knowing all of that, I still waited until the opportunity was there. And it was like, now here's this deal who wants to do a fund of funds. And at that point, I'm reaching out and I'm talking to Carly and to Carolyn, and we're coming up with a name and we're putting together a website to like we each had personal brands coming in somewhat, and like, but together we didn't have anything that people could go to and although that may not be essential, I do think it's a really strong and critical piece. I think that gives you a ton of credibility to your investors if they have a website they can go to, if they see that it's a team of people, that you look like you're polished, you're put together, especially when you're talking about checks of this size and these sorts of investments. So this is, for me, probably the biggest piece that if I could rewind time, I would go back and I would be like, I am posting consistently about multifamily, about these kind of assets, all the information or the things that a passive investor needs to understand so that they can get into these deals, so that when that opportunity lands in my plate, I can go out there, I can say, I have this, and they're ready. Like that is the pre-launch. And that is the secret sauce of like, if you guys are serious about this, don't wait. Like it starts now. And it's about getting them ready with the information they need so that they want this opportunity, or finding the right people that are looking for the opportunities that you're then looking, for the right lead sponsor for.
I think that it's under talked about. I mean, it's guided over so much, and I think it's so important. And I think also a really, really important part that is a prereq to that I struggle. I mean, I think a lot of us do, is the mindset of it, like me, imposter syndrome. Like Christy called me, and I had met her from, I don't know how. I think we met at, I don't know where we first met. Was it Masterclass is where I met you? Did I meet you? I think it was.
Or Squat Up. No, Masterclass.
No, it might have been the first time.
But to me, Christy, I'm like, she's an underwriter. She's been in this in 15 years. And I'm just like, I'm just have a goal to get into this. And we hit it off right away. And she called me and she's like, would you want to do a funds to funds with me? And I was like, me? You, the most experienced, like I have her on this pedestal, I'm like, me. But that was like also a mindset thing. And what she said is, one, you have to get in that mindset to make that post, to get out there. And you have to get over that BS mindset of like, I don't know anything. Why me? But I do have value to bring. And I think what's really, really good about us as a team, and when you're looking, I'm kind of jumping all over the place. So you have the mindset, but then also when you're looking at your team is, it's kind of funny. We kind of laughed about it this morning. We have this like little GIF going on, and we're so perfect for each other. And then I'm a go fast person. I'm like, just figure it out. Let's just build the parachute on the way down. And Christy's like, I'm afraid of, heights. Like, I don't want to go to the air. Not that she's not like that, but she is very like, wants to make sure. So if you guys have you guys seen Dumb and Dumber? We're in that shag van. They're in the doggy van in Dumb and Dumber, and they're like going over the hill, and everyone's just like white knuckling in. I'm like, let's just go for it. But that is why, that's the value I bring to, I'm like, let's push to go fast. I need someone to kind of pump the brakes and be like, Carly, let's check for spelling errors or something first. Let's just like get a good, so we meet each other at the middle. And I think that's so, we're dating ourselves. We are. But I mean, it's also very, very important, one, to get the mindset of like, you can do this, and then finding the right team. You just don't go on the internet and be like, who wants to be on the same team? And who wants to be my lead sponsor? But yeah. So I just wanted to put into that is your mindset going into it, and the people who you're quote unquote marrying to get into this is going to be make you or break you. You're who you choose for your lead sponsor and for your teammates. So
both of those.
I think right on par tracking on how the makeup of our team is. I am right in the middle. I am that like, I'm the happy medium, and just what between Carly and Christy said, between mindset and getting your ducks in a row and getting prepared and getting geared up, because this is my second time around. I have done this before. The first time when we got presented with the opportunity to do it, Vina's like, you need to be talking to an SEC attorney 2 weeks ago. Like literally, you should have already done this. Mm-hmm. So, and me, I'm a little bit more on the slower side. I am a visionary. I love all this stuff, but I'm not built for it 100% of the time. I need to go chill out in a dark cave and like be alone for a while to recharge, right? So there's that mentality of like, okay, I'm jumping into this first one. I don't know what I'm doing. You don't know what you don't know. And yeah, we did good. We did great. Success. We checked that box. And then for this time around for myself, like, there was a lot of mindset, like, do I want to do this? Like, these are phenomenal women. Like, they invited me to join on with them again. And I was just like, okay, let's do it. We did definitely encounter some hurdles and some like little things here and there of just going through the fund and like, okay, the closing date is set for this time. And then we're like hustling and bustling. And then the closing date set for this, it's like all these different moving pieces once you're inside of it. And having that extra prep time, like we're beating a dead horse here, you guys, having this extra prep time is so vital, is so important, not only for your mindset, but just like business and relationships on their like as is. You need to be, and I feel like a lot of you already are, like you're engaging, you understand this. It's probably been beaten into you through sub two and multi mastermind and everything like that. But like everyone knows who you are based on whether or not you show up. Are you showing up? Are you being present online? Are you participating? Are you networking? Are you going to those meetups? Are you pushing yourself outside your comfort zone? And oh my goodness, doing this the first time and the second time around, like pushed me so far outside my comfort zone. I literally had, I probably shouldn't say this, but the first time around, I had like a shoulder knot in my shoulder so bad because I was like, oh my gosh, like it's so much to take on when you don't have this runway, when you don't have this checklist and roadmap that we're going to deliver to you, right? Like, so these are the things you need to be thinking about and laying this out, because what are you going to say for yourself at the end of the year? What are the goals that you had already set out for yourself? Everyone's got their New Year's intentions and New Year's resolutions, right? And is this on the list? You want to break through that ceiling again this year. You want to do something new, something uncomfortable. And we're giving you the checklist and the roadmap to do that step by step. So you can take a breath in between and not feel like when that opportunity comes, you're just going to feel like you want to be an ostrich and bury your head in the sand, right? Because time is of the essence.
Mm-hmm.
So we want to do is we don't want to have to be like where you guys, we don't want you to get knots in your shoulders. We don't want you to be like, so we have Carolyn and Christy and I, we've gotten together and we have made a roadmap, like a 6-week roadmap. And we want to take you guys with us on this journey. And we want to just dive into it where we will go in week by week, checklist by checklist. Like this is a high level checklist. We are going to go into the nitty gritty. And so we are going to offer something for you guys. It's our first time offer that we've done this, is for you guys to come along with us. And so we can hold your hand. We're going to have a 6-week intensive course on taking your hand. So it's like what to look for, the red flags, the green flags. What else? All the
setting up structures. What does a PPM look like? What does your OM look like? All of these fancy acronym words that you're like, I don't know what they mean.
So many reads. Probably more legal and compliance information than you guys even want, because we want to make sure that you guys are doing this safely. And we have spent tens of thousands of dollars now on education and on lawyers' fees and on everything else to understand how to raise money, how to get paid, how to do referral fees, connector fees. You guys, if you guys are connectors, this is not the space to do it the way that you've always done it. There's a lot that goes around it. You can still get paid to be a connector, but there's very specific ways that it needs to be done to be compliant in this space. But yeah, we're super excited because honestly, this is like I said, coming into this, I've transacted on $300 million of funds, not a fund of funds, but at like a fund level with institutional level investors. And so I have a really good idea of like what the closing process looks like, all of the steps of what needs to happen to bring in the money, to get the wires, to have, all of this come together. And also just from being in the different masterminds that we're in and everything else, like we understood the process of like how to attract investors, what you're doing, all of the pieces, right? Like what does the legal work look like? What's the full subscription package, the PPM, all of these words. I know I'm kind of throwing at you guys, but we're going to go through all of it. We're going to show you what they are, how to do them, how to work with your attorney to get them, how to make sure you're compliant, all the SOPs. For those of you that don't know me, I'm super I've been like on this vision for time freedom for the last like handful of years, especially being, if you're owning and operating your own business, just how much it can be overwhelming. There's all this stuff. So I've over time gotten like super organized with things. And so I've put into place for Opal Equity a lot of SOPs and just really streamlined ways of doing things. So, and as we're continuing to improve, this is something we want to share with you guys, right? So, I'm going to be handing over our processes so that you know exactly, okay, I have an investor that's interested. What happens now? What do I do? Because there's a bunch of things that have to happen, right? You have to walk them through, like not only understanding the opportunity, but there's a lot of legal paperwork they're going to have to go through, what the commitment process looks like from a paperwork standpoint, using a third party investor portal. I don't want to overwhelm you guys with all the things, but the point is that like once that opportunity hits and you decide to do a fund of funds and your lead sponsor has it, you have a 30-day window maybe or a 60-day window, and legal in and of itself can take 2 to 3 weeks. And that's if you're using an attorney that they also are using, so they already know the deal. Okay, so a good portion of that is just sort of like the legal that has nothing to do with you actually like raising the capital. So this is really about giving you guys all like the big picture, all the frameworks you're going to need so that when you go out and you're ready to do it, you can be setting things up now, you can be working on your personal brand, you can get your back end in place, be building your investor database so that you're not trying to do all of it as soon as that day one, it's like T minus 30, go. And you're trying to do that day one because there's so much other stuff that you need to be doing and focused on. So we're super excited. We've packaged this up. I have such a tendency to over deliver and to just like give all of the things. So I am sure that I will be spending more time than I probably should be on a lot of resources and extra things for you guys that hopefully will be helpful. But we're excited. Yeah, I wish we had this, honestly. We had a lot of information and knowledge going into this thing, but this is like the distilled like framework for you.
Yep. And so we're going to go over all of this stuff, the risk management, the foundation, the structure, the strategy, how to build your team. We're going to bring our securities attorney in to talk to you guys. And what's really cool about this is you guys are like you guys are our beta tester group. This is our first one. So we actually are going to be doing it 75% off for you guys. And what's really cool about this is you guys are going to, if you guys come in with this and you guys want us to hold your hand through this, is we're going to be filming this live with you. You're going to be able to come in on these and raise your hand and ask our attorney and ask, we actually, when we were building our team, we consulted Rosie Noel and the Clifton Strengths, and Carolyn is huge into My Human Design, and we're looking at like where each other's strengths are. And so we're going to give you our roadmap of like what we did, and we're so happy we did what the shortcuts, like don't do what we did, do this, like all the stuff that we would have known. So it's something that it's going to be the funds to fund formula, the fast track to success. We want to help you guys get on this. So if you guys are interested, we're going to start our live trainings next Thursday, and we're going to get going on this. And we want to take you with us. And even if you're like, I don't have a brand, I don't have a team, I don't have a lead sponsor, I don't have this is going to help you for when you do, because when you're trying to do it all at once, like Christy said, we'll talk about getting out there and putting your brand out there, your personal brand, talking to people, building that foundation. So when you do get your team, when you do figure out what your branding is, when you do find your lead sponsor and they have something, you're not like, oh crap, let's do all this at once. I'm going to start everything at once. So this can be a value for all of you guys if you guys are interested in starting a fund to fund. And I really suggest this isn't one of those things where you're like, let's just jump and build your parachute on the way down and hope I did this right. Like, I am a jump and build your parachute on the way down. And I will tell you, don't do it for this. You need to have, I could have not done this without Christy and Carolyn and their knowledge in all of this. I feel like I was your first beta tester, you guys, because I really rode your coattails on the on the multifamily and getting it going. And so yeah. So,
but let me just say, like, that is the beauty of what this vehicle can do for you and your teammates. You don't have to have every piece of granular knowledge of multifamily and the commercial and how to operate an asset and every single thing. You just need to know one piece of the pie, and this is what we're going to deliver for you in the next 6 weeks. And talk about mega accountability
oh my gosh.
to start doing this. If you're not working on your brand or all of these other little puzzle pieces, this is an accountability piece to do that and to walk you through it the right way and introduce you to our resources that we have, that we communicate with often. We have emails going back and forth with Nick and Larry and Vina and Rose, like all of these people all the time, because they have become such way larger than just relationships and sponsors and all of these are relationships. These are the high level relationships that you want in your corner. And you are not only just building your resume in real estate, you're helping your network build their resume. And it's climbing the rope. It's taking the step across the bridge, right? Because your investors, the people who trust in you, are going to want to do this, are going to want to take the next step. And you are the way to get there. You are the way for them to do that, just like we are the way for you to do it.
Yeah.
Step by step.
Yeah. Tammy says, are these live classes? Will these be recorded if you're unable to attend? Yeah. So they're going to start out live. So this is because this is we're going to be filming this live as we go. Once this is filmed and packaged and live and we have everything built out, we're going to start selling it for probably way more. It's probably going to be like probably about $2,000 to get it started, because people are going to be able to have access to our attorneys, to our CPAs, everything that we have, and we're going to put it in a nice little package for you guys. So if you guys get in on this now, what you can do is you can be there live and you can ask these questions, and it's pretty much like you are getting like a little one-on-one with us and our attorneys and all the people that we're going to bring in to talk to you guys. So it's going to be like a little mastermind for you guys, and we're going to always be putting more and more value in it. So once you're in, you're in. You're not, if it's going to, as it goes forward, there's going to get more value and more value and more value. And you guys will be in at the bottom level where everyone else will not be. So if you guys are interested in even remotely doing it, it's a pretty good investment to get into it on the bottom ground.
Let me just say your return on investment is going to be astronomical.
Yes.
This is all the information. Like, honestly, if you are not doing something like this and going through a framework with us, then you need to be doing it regardless, somehow, some way. This is not, like we talked about, a strategy that you decide to do a fund of funds and you have no education around and you go out there, because that is reckless and that is irresponsible, and you are setting yourself and your investors up to not be compliant, for a ton of risk. They could lose all of their money. There's so many things that can go wrong, and it's very easy to miss a step. Okay. There's no one out there that's holding your hand. Even when you're working with a lead sponsor, they might give some good information. No one's holding your hand and making sure that all the I's and the T's and all of the things are crossed and dotted, right? We are going to do our best to give you that level of information and hand holding. So this is really an incredible value for what we are offering, because it's all of our experience packaged up. It's everything that we've built that we're like, then, okay, how do we templatize this? How do we like hand this out to someone else so that you guys can step in and already have a shortcut, right? Like, time is money. Money is time. And hundreds of just our hours that we have worked on this, mind you, not to mention hundreds of thousands of hours of education. There have been so much between the masterminds, like everything that we have invested in and my professional journey, all of this that's going into the knowledge to then be able to share this with you guys, in addition to the money that we've already spent. Like, the amount of money that we have spent on attorney fees just to find out how to bring connectors in or to be able to work with them with a fund of funds. Oh my goodness, like the amount of like Loom videos and everything else and conversations with our attorney. It's like, these are the things that, it's not easy to find the access to the information. There is information out there, but I say all this to say that if you at all are going to do a fund of funds in the future, make sure that you are investing in yourself, because if you do not, the cost will be far more than whatever you pay for whoever you pay it to learn these lessons. You absolutely need to be educated when you're moving into a fund of funds.
Yeah, this isn't a mess around and find out type thing.
No.
You definitely will find out. But Shanna asked a really good question. How long is this program available to join? So it's going to be available. We're opening it up indefinite, like for what? Forever. However, we're for people that, what did we decide? For people that purchase it today, by the end of the day, we're going to do a free one-on-one session with you guys, and you guys can cash that in whenever. You can do it at the end of the training. You can hold on to it. You can do it at the beginning, where you just pick our brain and we just hold your hand through the whole thing. So we'll do it in a whole, you have us. How long are we doing? For an hour? Greta just joined. Greta.
Oh my goodness.
I'm so excited to
That's amazing.
That's so exciting. So Greta, we'll have a one-on-one, well, 1-on-3 with all of us. And you can pick, I have marketing experience for the last 17 years. Christy has multifamily experience. Carolyn, this is not her first rodeo. She's got 600 doors. So you have our 3 brain power, anything from like the marketing, the sales techniques, the strategy, how you put things together. 3-for-1 special. Israel says, Lee just joined too. I'm so excited.
Oh my goodness.
Amazing.
Yay, Lee. I'm so excited.
Oh,
Lee's a go-getter. I know. So we'll kick it off next Thursday too. So these, like Tammy said, are these going to be live? We're going to film these live. Yes. And they're going to be I think we decided every Thursday evening, and we'll film them live. There will be replays. If you guys can come, bring all your questions. And it's going to be a little tiny mastermind. And this is only going to be for you guys that start. It's going to be, because we'll probably package these up into courses so people can watch them on demand. So if you're coming in on this one, then it's basically like handcrafted for you, and everybody else can watch your journey and your questions down the line. So, yeah.
And any improvements that we make, it'll be lifetime access to those materials and any updates. I'm self-confessing that I know myself, Carolyn, I know also. We are very much perfectionists in not to say Carly
is. No, I'm not. Like, I will say I'm not.
When we say we're slow, I'm very slow. You guys are slow because I care so much about delivering a good product in good quality and for it to be right. And I'm like, to the nuanced detail, like I'm in the weeds. And so I just know that, like, as much as, you can just go out there and like film these and deliver the content each week, the stuff's going to continue to get dropped, you guys, because that's just the reality, and it's never going to be good enough.
And it's true. You guys are going to get so much value. And just so if we do anything else with it, if we add on to this course or anything, just so you guys know, you're in at 500. No, we're not going to be like, okay, well, we made it fancier, so you owe us. No, you're in from the ground up. So, did I miss something? How does it help me and my investors earn money? How does this compensation work?
Oh, good question. Okay, so we will be touching on this too in the course, but basically there's a lot that goes into structuring these things, but you'll be a GP of your own fund if you're doing a fund of funds. So you get fees to be part of, be a GP and to be managing this. Now, where it's tricky and what we'll walk you guys through is how you structure that so that your investors don't pay 2 fees, right? We don't want to dilute their returns to have us involved as a middleman. And so what that means is that they'll come in and there's a special structure where you can get compensated by bringing a large check into the parent fund, and that cream of the in between, you can basically negotiate better economic benefits for bringing in a bigger check from the lead sponsor that then is able to pay. So really what it means is that your investors, from a net perspective, like they're not paying extra fees. They're still just paying the like fees to the parent sponsor for finding and managing the deal. We as fund managers, it's different. It depends on the lead sponsor. It depends on the attorney you're working with. There are a lot of different structures here, but a very basic one, just to give you some food for thought or how we structured this last one, we have an acquisition fee as GPs. So we get like a discount fee basically of bringing capital to the lead sponsor. We have an annual asset management fee that we get paid. And then on the back end, there's a disposition fee as well. So, I mean, depending on what that arrangement looks like, you could be looking at anywhere from over the lifetime of the hold, like 50 to 100,000, maybe more of like fees that flow through in total. So this is a strategy too, and something we didn't really touch on, that even if you did one fund of funds per year, like you're building up your, other businesses, you're doing whatever it is that you do. You have private, money lenders that you're working with that you're doing, or you have your own real estate portfolio, you're flipping, right? Maybe this is something that you're like, I'm just once a year going to find a really good deal with a really solid operator. I already have all the back end built because I've done it before. And I just offer it to my investors. They come in, and you rinse and repeat, and you do it once a year. And it's a really nice supplemental like fee that you're getting each year, because over time it continues to build. And each time you do it, as Carolyn will tell you, it's like it gets easier, right? Like it's going to be a big learning curve the first time, which is why we want to help hold your hand. And then after that, like you're still going to learn, but you're going to get better and faster, and you rinse and repeat.
Yeah. And to be clear, you're not coming, because Ricky says, well, all I know is I have leads for special funding. So to be clear, we're going to give you the roadmap to do what we did. We're not going to partner with you. That's not the goal on this. I mean, maybe we could down the line. We're going to be doing our own funds later, but the goal of this is to package this up in a nice little bow, and we give you the roadmap, and we're like, drive down this road. Now take a left over here, and don't forget to do this, so you can find your lead sponsor, so you can go work with your people that that have money, and you guys can all make money together. So Peter just signed up. Peter, welcome. I'm so excited, you guys.
My gosh,
group. I'm so
pumped.
Yeah.
So are we the GP? So we're the GPs of this particular fund. There's a little, we're not the GPs of the deal. That still is the lead sponsor, but you are a GP of your fund. You're working with limited partners, all your investors coming together in one entity, and that is then the investor that's going into the parent fund. So yeah,
I read that as GPS too.
Oh, I thought it was GPS giving direction.
We also are the GPS for you guys.
We're both. We're your GPS.
Yes.
We're your Google Maps.
Your GPS.
Another good question from Stephen. What size of fund is the minimum that makes sense? Okay. So most of the minimums out there that probably make the most sense are at least 500,000. And the reason we say that should be a minimum is for a few reasons. One, that's probably the minimum amount that the lead sponsor would accept in order to give better benefits to that share class, so that you can get paid, your fees as well. And then also, there's a lot of fees that come into play, and we'll cover all of this stuff in the framework with you guys, but there's a lot of fees for each investor that comes in that are like administrative tasks. There's like special filings you have to do each time you have someone invest money with you with different states. There's all these other costs that are incurred. So you really want to make sure that it's worth it. So 500,000 is a good starting point. You could always go larger than that, but that's kind of the minimum that I would expect if you want to do a fund of funds.
I'm excited, you guys. We're going to get started. What are we going to start with? I think we're going to start with, I need to look at our roadmap that we have. Oh, do you guys want our roadmap that little thing?
Of course you do.
Yeah, your free gift. So regardless,
free gift. We can't forget that. I have the link right here.
Perfect.
Here's the link. I'm going to drop it in the chat. This is your little checklist, your roadmap to success. And this is only just like a fraction of what we're going to dive into. We're going to like get really into the nitty gritties with you guys on, just all the little things. And what I'm really excited about is we're going to bring, I think one of the things, my most excited thing, everybody's different, but we're going to bring some people in to help look at your strengths, like the Clifton strengths. We're going to even get into that. And your mindset, we're going to get into that, and the personal branding. It just goes deeper and deeper and deeper. So I'm really excited to get started next Thursday. So,
Absolutely. Super pumped.
what types of returns, Stephen wants to know, are projected for investors? 8% to 12% question mark?
So this is just going to depend on the opportunity. Like it's up to you, and it's going to differ asset class to asset class, right? Like the riskier the investment, if you're doing something like raising funds for a development deal, for example, development can be very lucrative. It's also very risky. Those returns might be in the 20 to 25, who knows, 30%, returns for investors. If you're doing something where you're walking into a very high-end, nice asset class, something similar to what we just raised for, there's not a lot of like quote unquote meat on the bone to really improve. Like it's a really solid cash flowing opportunity. Those returns are still really strong. They're in 11 to 15% projected, but that's a very different risk level, right? Like there's already tenants there. It's already built. It's doing amazing. And they're really just going in and saying, how can we add more income to this thing and push that value up? So that's in the multifamily space. If you're going out and you're raising for, RV parks or for self-storage or senior living, it completely depends on the asset class and who it is that you're partnering with, like what that deal looks like, what their track record is, what kind of returns they're offering. And then you sort of, well, what we've chosen to do, you don't have to, but we choose to mirror sort of the parent returns because for me, it's important that my investors are getting the same return as investing with us as they would with the lead sponsor, right? Like I don't want them to get a lower return. So I want to make sure that opportunity is the right fit for them and that we're just that bridge. So we're the hand holding, the helping them to find it because they don't know. They don't know. They want to get into it. That was the main reason why I started Opal Equity and why I wanted to do a fund of funds. I had a lot of people that were approaching me because I was starting to put myself out there. I was building up a personal brand that they were like, oh, I didn't realize, like I knew you were in real estate stuff or whatever all these years, or you kind of did this stuff, or in development, but they didn't know exactly what I did. And when they realized how much experience I had and that I was so close to so many good investment opportunities, I can't tell you the number of people that contacted me from business school that were like, oh my gosh, I've been wanting to invest, like I'm in so heavy in stocks. I've been wanting to invest in multifamily. I don't know how, like, I just didn't know how to find the right deal. And it's intimidating. I don't know how to go out and find who do I invest with and what do those deals look like. So they got to see that someone in their network did have that experience, did know what to do, and I could be the bridge for them. So for you, that might be different, right? Like you might be the bridge to RV parks. And really, then that's the brand that you're building. That's the asset class. Those are the people and the experienced operators you want to be partnering with so that they're getting the best experience. Because you're building these relationships. These investors are your investors. You want to take care of them, and they're with you through the life of that investment, and that can make or break, your reputation as a fund manager for future opportunities. So hopefully that makes sense.
Yeah. Great questions. Ricky says, can I use your credibility kit to get approved for funds? So we are not going to give you, we're less of getting you approved for funds. We're going to show you how you can bring value to experienced operators, bring value in your money and your relationships to get into a deal. So we won't have a credibility kit. This isn't like a proof of funds type thing. We're just going to show you, we're going to give you the blueprint of how we did it so you can do it too. And we'll just hold your hand through there. Beth says, what happens after the 6 weeks? Will you have calls and trainings as you offer this to others? We will always be adding value to this, but the meat and potatoes of this, like Christy said, she's like, I got so many ideas and she has so much knowledge that it's going to be dropped in there and we'll have more calls for sure. But the bulk, we're always going to be making this better too. So we will still have like events and things that we do for sure. So great questions. Ido just signed up. I hope I didn't butcher your name. I'm really good at that, butchering names. So any other questions you guys have?
Yeah, any other questions?
My gosh, you guys, I'm gonna have to like redo my calendar because I didn't think like I didn't know how many to expect were going to be signing up on the call. And we promised these like one-on-one strategy sessions for
I
anyone
know.
who signs up today.
Oh my
So I'm like, oh my goodness, we have a lot of strategy sessions, which I'm super stoked about. But yeah,
Yay.
it's gonna be amazing. I can't wait. I'm
Yep.
super excited about this. And we just I don't know. One thing we didn't talk about is that for Opal Equity, and this just like so perfectly dovetails with it. Like the heart of Opal Equity is about teaching, and it's about like learn while you earn, and it's really about helping our investors get into opportunities and understand the space, so that they can learn along the way as they're earning, right? Like they're putting their money in, but if they want to understand multifamily and later kind of get more actively involved, that's really the journey that we want to take them on. And so for us, when we looked at, what we've been doing with the fund of funds, being able to put something like this together, I can't think of any better people than to be able to like educate and pour in and to help with concepts like this, because it's like watching what Carly and Carolyn do so regularly in the like sub two and the Gator space. It's like they're just absolutely phenomenal at teaching and helping people and pouring in and serving people, especially when they're newer and there's a lot of like overwhelming and big topics, right? So I'm just so grateful to be partnered with you amazing women, and yeah, it's gonna be really good.
And let me just say, like, tooting our own horns here, you get to learn alongside three awesome women, and that's not really seen in this space.
It's true.
It's just going to be awesome. It's going to be awesome. We're super excited, and super, super excited to see what this brings for you, the opportunities that come for you. And wouldn't it be so incredible to be a part of a fund of fun by the end of 2025? Like that is the goal. Let's everyone here, everyone that signed up, everyone that wants to participate, like let's put that in our brains. That's what we want to do. We're gearing up. We're on that runway right now, and we're going to take off by the end of the year, because the year's going to be over by the blink of an eye. These years go by so fast when you're an entrepreneur and in real estate. Like these quarters just go bye, bye, bye. Anyway, I'm super excited.
Future you will thank you as checks are coming in, because as you're just getting that mailbox money and you're like, well, I created a fund of funds and now I've brought all this money to these lead sponsor and all these checks are coming in the mail. So, and you're learning along the way. So if you're earning, you're learning, which is really good. I mean, most people pay to learn. We get paid to learn, which is really cool. So yes, as Tony Robbins says, we overestimate what we can get done in a week and underestimate what we can get done in a year. You're absolutely right, Tammy. And I think that's should be one of our things on our first kickoff calls. And even on our one-on-ones, we can really dive into. I mean, you guys can decide what you guys want on your one-on-ones, but diving into that goal, setting that attention of like writing it down quarterly, daily, weekly, yearly goals, and checking in with yourself on where you're reaching those and like getting those KPIs, because who doesn't want to be in multifamily? I mean, if you're here or make some sort of difference in some commercial space, and a goal of one of the cheesiest things, a goal without a plan is just a wish. And so this is a way to just take action. And so future you will be thanking you as you cash that mailbox money.
Okay, and then Spencer asked a good question here. How long would you say it takes to recoup your startup costs? So again, it's going to depend on how you structure this for your fund and with the lead sponsor. But I will say most you can probably structure where your acquisition fee that you're getting right when you close is enough that it's going to reimburse all of the costs. So we'll get into more of that stuff with the course, like what you might expect. There's legal fees. There's also all the other costs that aren't necessarily fund costs, but if you are starting a new brand, you're starting a company, you're putting up a website, you're doing all of these things, those are all costs that can be reimbursed. And most likely the fees that you're allotting for yourself up front would cover all of that. It would reimburse that. It would definitely reimburse this, this training and this framework that you guys are going through very easily.
Yeah.
Great question. Amazing question. Any other questions?
Did everyone grab the starter kit? Should I drop that
Yeah.
in the chat again? So I dropped it earlier, but I just want to make sure that everyone's
Here, I
walking
have it.
with
I
that.
got it.
Okay, perfect. So we'll drop that again. for you guys. And we're also going to be, keep an eye on your email. We also have we mentioned it earlier, but kind of a resource that goes through different fund types. So if you want to get all nerdy and in the weeds and see what the different kinds of funds are, what an open, a blind, a semi-blind, the fund of funds, and get through that, kind of just gives you that high level overview so you understand the different types and, why, and for you to look at and understand, is the fund of funds the right pick for you?
Amazing.
I'm just going to put the link again. If you guys want to sign up, don't forget, if you sign up by tonight, you get a 1-on-3 strategy session whenever you guys want. So you guys can be like, I want to go through the training first. You can pick your strategy on how to do your strategy session. You can do it up front. You can do it behind. You can keep it till you want to have, you're getting ready to do your fund to fund and you want our expertise. So that's for you. And then this is going to start going up. Once we start the sessions next week, the price is going to go up for sure. So just a heads up on that.
Yeah, this is definitely the lowest we'll ever offer it. I know there were a lot of people saying it's good value for the price, and trust me, we know. It absolutely is. And but that was the point. Part of it too is we want you guys to know, like, we're doing this with you for the, the first time in terms of, filming live and doing a course. And so we want to take you on that with us. And I don't know. I kind of want to, can I go slightly rogue here?
Yes.
Of course.
Casey, does anyone that signed up, do you guys want to chat with us for a minute? I really would just love to see your faces of like who's signed up. And if you want to tell us a little bit about like why, like what you're excited about with the fund of funds or what.
Yes.
Why this
Love
is your
that.
airport or something. Is there anyone that's not feeling too shy that wants to share? So I would love to meet. I know we're going to be spending plenty of time together, but if anyone's feeling brave and wants to share, I would just love to hear a little bit more about
Tammy does.
Hi, Tammy.
Hold on, let me get Tammy pulled up to the top. What's up, Tammy?
Hi.
I'm so excited, my Idaho buddy.
I know it's so much fun because I've been really blessed when you talk about networking, so important. And I joined Gator in September of 2023, and real estate was completely out of my wheelhouse. As Carly knows, I worked for 27 years at a women's prison. So I just was out of my wheelhouse. And so joining PACE's program has really, opened up my eyes to lots of different ways to doing real estate. And my very first meetup I went to, I met my partner who has incredible deal flow. And so I've been his connector. And so I've curated a list of hard money lenders and private money lenders and end buyers and all this. And we just kept on talking about, I exert a lot of time and energy to find private money lenders for his deals. And I said, it would just be so much easier if you had a fund.
Yeah.
You just grab all these private money lenders, and I have 3 of them so far that just want to do a rinse and repeat. And so learning how to structure this that way is just going to, be another skill I can add, and it will be able to help my partner in lots of different ways. And we want to do multifamily. It's that next step. So I'm so excited.
I'm so excited too. I know you've been talking about this for a while, doing funds and doing all this. So, and you have a lot of connections and you've been doing this. So I think this will be great. It really is smart because once you once you do the hard work of finding the team that you want to work with, your team, like naming, the branding, a lot of that stuff is intensive. And just like you said, you can rinse and repeat for the most part. You have your branding you're going to have to do. But it's nice to know, to have the roadmap. So I'm so excited, Tammy. Yay.
Super excited.
All right.
Thank you for sharing. Thank you for being brave and coming up here.
Yes. Thank you,
nice
Tammy.
to meet you. And I can't wait for Thursday.
Yeah.
Well, when you work in a prison for 27 years, you can talk to anybody.
Oh yeah. I bet you got some tough skin too.
Yeah. And my BS meter is really high. So
I love it.
And you don't take any of it either, right?
Don't.
You can't. Yeah.
We're going to get along great, Tammy.
Uh,
So, oh, I'm so excited. Okay, anybody else? We'll put both of the links one more time. I'll put the link to get it. If you get it tonight, you guys can have a strategy session with us, which is a value, is probably a lot because it's a lot of value. Strategy sessions, they take a lot. And so it's, what would you guys say? I think between the three of us, it's probably like, if we were to offer strategy sessions with us, oh man, I think it's probably like a $5,000 value for sure.
Combined with all of our experience and everything.
And our lawyer costs that we've spent and our experience and everything at the very minimum. So you guys are going to get one, this is probably going to go for like $2,500 down the road when this is all put together. $5,000. What? It's like $75,000 value for 500 today. So, I'm so excited. Israel, you're on there too. Israel, we'll see you. Is there anything we can do now to prepare for next week?
Action takers. I love this.
I love it. Israel's not messing around. What we'll do is we'll put together an email of like a list of checklists of things that you guys need to do to prepare. We'll get that out there tonight, tomorrow morning at the very, very latest. And we'll give you something. And we'll give you guys our email if there's anything that you guys have in the meantime. But anything else you guys have any questions about? All right. Thanks for coming, you guys. I appreciate your guys' time being here and giving us the opportunity. I'm so grateful that you guys came. And for those of the Tammys and Lee, Ito, I don't know if I'm saying your name wrong. I apologize. We're so excited, Kathy, to see you guys on Thursday. So,
yes.
All right. Have a good
Amazing.
weekend.
If you haven't grabbed your starter kit, make sure you do it before we close the Zoom down here. Again, this was a live bonus for you guys. So this isn't something that you're grabbing in an email later. This is something we promised that was exclusive to you and to anyone who has signed up. So anyone who does sign up will have access, but you're not here live and you're watching a recording, I'm sorry.
It pays to take action and show up. So
Yes.
For sure.
all righty, you guys.
Love it. Thank you all.
All
Have
right.
a beautiful weekend.
Have a good weekend. Bye,
See you
guys.
next week.
All right. Thanks, everyone.